stock futures rose late Wednesday immediately following President Donald Trump's announcement that he will delay implementing higher tariffs on $250 billion of Chinese goods for 2 weeks as a gesture of goodwill. Trump said that the tariff hikes from 25% to 30% that were scheduled to take effect October 1st will now go into effect October 15th. The Dow Jones Industrial Average immediately rose 0.6% or about 150 points, though they later retreated and were last up about 120 points. The S&P 500 rose 0.38% and the Nasdaq Composite gained as well. Asia-Pacific stocks mostly gained in early trading Thursday. Japan's Nikkei gained 0.8%, while Hong Kong Hang Seng Index slid 0.5% after Hong Kong exchanges and clearing made an unsolicited $36.6 billion bid to buy London Stock Exchange. Stocks in mainland China gave up early gains, with the Shanghai Composite rising 0.45%. Australia's S&P ASX advanced 0.3%. U.S. and Chinese trade negotiations will reportedly meet in early October, and the delay could be seen as a sign of goodwill before the talks. Earlier in the day, China said it plans to exempt 16 U.S. products from an upcoming round of its own tariff hikes scheduled to take effect September 17th. Those include seafood products and cancer drugs, according to reports. Yesterday, Trump said he's putting off the tariff hikes at the request of China's top trade negotiator Liu He, and, begin quote, due to the fact that People's Republic of China will be celebrating their 70th anniversary on October 1st, end quote. For oil prices, the past session wasn't so positive. Oil futures declined on Wednesday, settling at their lowest in about a week, as a report that President Donald Trump is considering easing the sanctions on Iran raised the possibility of the return of the country's crude to the world market. Trump discussed easing sanctions on Iran in a move to secure a meeting with Iranian President Hassan Rouhani later this month. West Texas Intermediate crude for October delivery fell $1.65 or 2.9% to settle at $55.75 a barrel on the New York Mercantile Exchange, the lowest for a front month contract since September 3rd. November Brent crude lost $1.57 or 2.5% to $60.81 a barrel. A big weekly drawdown in U.S. crude supplies had provided some support for prices early Wednesday. However, supply will come online big time in the fourth quarter and first quarter, and that longer-term prices will have a hard time rallying as demand tends to be weaker at that time of the year. Also on Wednesday, the Energy Information Administration reported that U.S. crude supplies fell by 6.9 million barrels for the week that ended on September 6th. That marked a fourth weekly decline in a row. On average, analysts forecast a fall of 3.6 million barrels, while the American Petroleum Institute on Tuesday reported a drop of 7.2 million barrels. Gold futures reclaimed the key $1,500 an ounce mark Wednesday as traders weighed President Donald Trump's latest tweet calling for the Federal Reserve to cut interest rates down to zero ahead of the central bank's meeting next week. Gold for December delivery on COMEX tacked on $4 or 0.3% to settle at $1,503.20 an ounce, reclaiming the psychologically important $1,500 mark after settling below it on Tuesday for the first time since August 6th. Gold hit a string of more than 6-year highs earlier this month as stocks sold off in August with the U.S.-China trade war worsening, but has pulled back this month as equities have steadied. Gold is around 1% so far this week and 2% since the end of August. In the currency markets, euro to US dollar exchange rate slipped, and the pairing is currently trading at an interbank rate of $1.1025. The focus of investors is now on Thursday's European Central Bank's interest rate decision, which will likely set the tone for the next week's Federal Reserve meeting. Reports have suggested that ECB policymakers are thinking about a revival package that includes a rate cut, a promise rates will remain low for longer, and compensation to banks due to any side effects of negative rates. Added to this, German Finance Minister Olaf Scholz claimed that the country was ready to pump many billions of euros into the economy to prevent a significant slowdown. However, the single currency was left under pressure as concerns have been building over whether central banks are reaching the limits of any stimulus options. Sterling also dipped after a Scottish court ruled on Wednesday that Prime Minister Boris Johnson's suspension of the British Parliament was unlawful, prompting immediate calls for lawmakers to return to work as the government and Parliament battle over the future of Brexit. The British pound fell as much as 0.4% to $1.2313 overnight and hovered around 1.2330 in Asian hours. That is all for today. Thank you so much for watching, and please click subscribe to always be in touch with the latest market news.